Welcome to the May 6, 2024 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, President, McGowan Group Wealth Management. This week could have been an important bottom for the Dow. You could see April, wow, that was a pretty big decline in April, and we're still down about 4% from the peak at the end of March. Now, what happened right here? Fed Chair Jerome Powell doing his press conference on Wednesday, and he says, well, we're not going to raise rates. And that was all investors needed to hear, because there had been rumors after a couple of months of hot inflation that he would even go further on the rate increases. He took that off the table. And notice we didn't go below this bottom in the middle of April. And it appears to have reversed. So we'll see if that holds. But that's all investors needed to start buying. And the Dow Jones Industrial Average, spiked up several hundred points over the period of 2 days. So we'll see if that holds. But anyway, Dow year to date is a measly 1.75%. What do the other indexes look like after the April swoon? All right. Energy is leading the way. S&P 500, well, consumer discretionary is actually leading the S&P 500. Next is the energy sector. The traditional oil and gas companies up 11%. That's why you subscribe, because for several years now we've been saying that is one of the most attractive sectors. The NASDAQ has shrunk to just a 4% return, NASDAQ 100. That's primarily the tech companies, the Magnificent Sevens in there too, and the S&P 500, about a 6% gain so far this year. All right, earnings. This is really what drives value longer term. Federal Reserve loosening cycle may be delayed. We got that over the past 2 months. But if earnings continue to rise and the Fed eventually does begin to cut rates, net present value of future cash flows, future earnings for companies, as long as they're going up, they could be worth a lot more because of the way you calculate. What's the value if I'm going to get paid a dividend all the way out here? What are those earnings worth? What was that dividend worth? Well, earnings growth, 4.69% so far. We've got 373 out of 500 companies reporting, and sales growth about 4.3. I would call it anemic, but still on the positive side, and we'll see what happens as the rest of the companies report. That's why you want to tune in each week and let us know if you have recommendations for us. Now, what kind of market is this going to be? If those earnings continue to rise, there's a premise in here built into the AI supercycle that I wanted to mention again, and that is the 1990s. How long can the rally go? Well, if better decision making through advanced programming, AI, actually does continue to drive profit growth and makes companies more effective, well, that efficiency translated in the 90s. Remember, PCs were kind of a geeky thing in the 80s, and then everybody got one in the 90s, and of course the internet became ubiquitous. Well, during that time period, productivity soared, access to information, the use of the data, and the market rallied after the Fed tightening cycle of 94. And right here, what happened here? Well, the Fed chair, Alan Greenspan, said, oh, this is irrational exuberance. Well, that might have been true to his opinion, but what actually happened was a profit growth that was never seen before. And this was the roaring 90s. Could it be that the rally goes further than anyone expected? Now, but you got to right here, and it was 12 years in the desert after that. Everything got overvalued, and you had to have another strategy. One of the strategies we used to actually make money, while the Dow did this and this again, and it took it 12 years to make a new high, ouch. Well, one of the strategies we were using at that time was actually high yield bonds, and it turned out to be a great offset to the ugliness in the markets in 2001, 2002. Now here, this is Bitcoin, right? What could go wrong here? All right, there's a huge disappointment going on. All the crypto cult members are really, really disturbed by what we see right here. Now, I want to say something about Bitcoin as an investment, all right? We're going to go back to 2019, all right? And Bitcoin hit 20,000. Now, there was a pandemic, as you may recall, and you know, Bitcoin, you would think that it would at least hold its value. No, it went from 20,000 to 3,900 in the pandemic. When you needed the money the most of it wasn't even there. And it took a while to recover. Wow. Then you go all the way to 70,000 right about here. And you did it a couple of times. Wow, that was a huge rally and everybody got excited. Now, what happened at the beginning of the year? Look at this. Everybody says, oh, there's two things going to happen. They're going to make, the SEC is going to approve the Bitcoin exchange traded funds, meaning like gold went fivefold when the SEC said, okay, there could be a gold exchange traded fund, makes it easy to buy because gold's really hard to carry around and, you know, like try to pay for a car. Anyway, made it really easy to buy and sell. Everybody piled in and you got a big old rally. Well, you did have a big old rally. Look at this. In about a year, you go from 25,000 to 74,000 at the high, 73,797. Well, that happened, and they were also anticipating that the Bitcoins are going to be twice as hard to make, so you only have half as many new ones created by all those mining operations that burn lots of electricity and produce nothing, by the way. Anyway, wow, this was supposed to go to like 100,000, and it still might, but that's a huge disappointment because you had two pieces of great news, everybody bought in, and now what do? I don't know. It's a one-dimensional asset. There's a price, and it depends on whether people want it or not. Well, after this, a lot of people are disappointed with their exchange-traded fund because it's down, and it was supposed to go up, and you don't get a dividend, no cash flow, and there's no real valuation to it. This could be a world of hurt, and you could also have a buying frenzy. That's just too volatile for what we do. Now, this is another world of hurt. We issue more warnings on networthradio.com. You can go to the website, and you can also subscribe to the Apple Podcast. But here, this was Peloton. Remember, in the pandemic, boom, this was the wave of the future. Everybody's going to be in their urban apartment on their Peloton, you know, and it's like a group thing, and you had all kinds, and everybody's excited. Guess what? This company never made money, right? If you looked at the financials, they never made money. Wow. Well, they went to $171. They're still losing money, even though they had probably sold all the Pelotons that people wanted, and people get bored with them, and then they just hang clothes on it and stuff, and they're sad they bought it, and they'll put it on eBay for, I don't know, half of what they paid or something. Anyway, boom. So this is a world of hurt. Now, the news came out that the CEO resigned. Now, the stock went up 11%. That had to hurt when he saw that because everybody was celebrating the fact he's gone. And then it got slammed right back down, even further down, because investors realized this company's never made money. And if they can't get any new investors, well, they might not even make it. All right, last thing. 10 stages of estate planning. This video is also posted here at YouTube, and no matter what stage you're at, 38 years I've been doing this, and I've put everything that I've learned into 10 different stages. So no matter where you are, I'm going to take you to the next level of expertise to get your estate plan in order. And it's a video that you may want to send to your parents and your kids so that they can begin the process of understanding, and a family can help each other more effectively. I'm Spencer McGowan, President, McGowan Group Wealth Management. Thank you for tuning in. We'll be back next week. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.